Ladies and gentlemen, open banking pioneers, thank you for joining us and a big warm welcome around our campfire. I am delighted to be hosting this campfire, focusing on financial inclusion. Now, this is a topic very close to our hearts at OBE, and it underpins our mission, which is to fundamentally catalyse the adoption of open finance and open data for better financial inclusion around the world. Now, as I can see from our registrations, we have got many like-minded people joining us from around the globe. So thank you, a big warm welcome, and thank you to you all. Now, by way of a little background, we actually kicked off our first campfire with this very topic. It proved so popular and there was such a desire to explore it further that we've been revisiting this very regularly to explore this space. And we feel it's important to see where we are today, to actually take the pulse and to see how we can work together as a community to resolve some of these problems. Okay, to give this topic a little context, let's get under the bonnet and look at some of the figures. Financial exclusion remains a significant challenge in the 21st century, which is surprising given that Britain actually prides itself in being a global leader in financial services. Now, whilst preparing for today, I asked Giovanni, our head of blog content and research, to collate some figures to share with everybody. Now, if you've not seen Gio's blog, please do take a look. I'm going to say this very proudly now. He's the first person to have a PhD in open banking, and that supports our drive for a very authoritative conversation. Okay, so I'm going to read these figures out, so you want to buckle in. Okay, 2020, data from the UK Financial Inclusion Commission highlights that 28% of adults, that's 14 million people, have experienced a direct negative effect on their income due to the pandemic's first lockdown. Okay, now there's in a recent borrowing index from Credit Kudos, and we have Freddy on the panel, and I can't wait to hear what he has to say, but that actually shows how Gen Z and the millennials were amongst the hardest hit by the pandemic. Now, you really do want to buckle in for this next figure. 22% of all adults in the UK have less than £100 of savings, full stop. Now, I just want to ask you to think about that figure when you're queuing at this supermarket this weekend. £100 of savings, that's all they have. That's 22% of adults in the UK. And 1 in 5 adults would not be able to cover more than 1 month's living expenses. 2 more facts to kick off this conversation. 1 million people in the UK don't have a bank account, and 16 million people in the UK are borrowing to pay for essentials because they're running out of money. So that's the context. What are we going to do? What are we going to do as a community? Well, the Kalifa report also identified the role of fintechs in addressing financial inclusion and the shortage of availability of affordable credit to the underserved. Now, one of the reasons OBE exists is to explore innovation and facilitate partnerships, and that word we keep talking about, collaboration. So I would encourage you to use this space, our platforms, to further this cause and to take this conversation to another level. And we inspire you all to innovate. So I'm asking everybody to sort of get their fintech mojo on. Now, before I do pass the mic, and everybody that knows me knows exactly what is coming next, at the bottom of our screen, you will see our QR code. Please, will you lift your phone, scanning that QR code, and make a charity donation through open banking payments. It's powered by MoneyHub, and we've got Sam on the panel. So thank you, Sam, and thank you for the team at MoneyHub. It's absolutely great to see you here today, Sam. Now, for a conversation that is so important to everybody at OBE, we are thrilled, absolutely thrilled to bits, to have Ron Kalifa and Kelly Devine as our keynote speakers. So thank you. And our distinguished guest hosts, there is no better way to start this conversation. I am delighted to hand over to Lord Chris Holmes of Richmond to dive into our sessions. Chris, over to you.
Thank you very much indeed, Helen. Good afternoon to everybody in the UK and welcome to everybody in the world, wherever you're joining us from. It's an absolute pleasure to be with you all today. This is such an important subject. It's not just about economics, it's about society, psychological well-being. It's about ultimately what it is to be human. And if we get it right, we currently have the two pernicious forces of financial exclusion and digital exclusion walking all too often horribly hand in hand. If we get it right, I think financial inclusion could well be the lead for digital inclusion. It's an absolute pleasure to be joined by Ron and Kelly. Ron's not only worked tirelessly over the last year in this area, he's pretty much donated his surname to be a byword for the potential of fintech in the UK and rippling around the world. Kelly's work at Mastercard is well known, and we'll be moving into the partnerships and all of the excellent results that have happened there. But as you've heard, around 1 million unbanked, multiples of that underbanked and underserved by our financial services sector. So, Ron, coming off the back of your excellent report and your keen involvement in this area, how do you believe that we can move forward with open finance, open data to really get into issues around credit, housing, energy and the like?
Chris, thank you very much for such a warm welcome. And Helen, thank you for the opportunity as well. I'm absolutely delighted to have the opportunity to speak today. Look, fintech frankly presents, I think, a huge opportunity to improve the financial health of the underserved. I think in the stats that Helen, you talked about, we've got to think about it, that financial inclusion is both a UK as well as a global issue, with those significant numbers of unbanked, underbanked, and frankly, over-indebted consumers present here and in the developing world. As you said, 1 million people who do not have a bank account. Another stat that I've got is that 12.5 million people in the UK have little or no confidence in their ability to manage money. So it presents a challenge to both governments who struggle to have an impact through policy and education, and incumbent financial institutions for whom servicing these consumers is just not economically viable. And I think we need to come back to that point. So whilst it's a moral imperative, meeting this challenge is also an economic opportunity. You know, if you look at the data that comes from the IMF, they suggest that by improving financial inclusion of citizens here in the UK, that could increase average economic growth significantly. And fintech, by its very nature, I think reconciles this challenge by lowering the cost of servicing these consumer groups by, for example, by providing bank accounts at lower costs through digital channels, by providing cheaper borrowing costs through the sophisticated use of data, by lowering insurance premium and reducing overinsurance, by creating more user-centric customer journeys and so on. So that's the way that we've tried to tackle it within the body of the report. And I think that the inclusion opportunity also drives competition with incumbents who are driven to invest more and collaboration opportunities, for example, with them and the big tech providers who have significant data pools that have yet to be utilized and used. So the pandemic has catalyzed, I think, digital financial inclusion. In the very first month of lockdown, 12% of the population in the UK, 6 million people, downloaded a banking app for the very first time. And it's been estimated that fintech providers distributed as much as 30% of the CBILS schemes to SMEs during the pandemic. So unless fintech is supported, I think retrenchment could lead to a reduction in service provision and a slowing of inclusion. And that was the purpose of the review. And there've been a series of recommendations that have been put forward as a package to try and accelerate, as I think about it, a virtuous circle that supports fintech, increases financial inclusion, and importantly, drives economic growth. Thank you.
And just to build on that, Ron, you've had a tremendously successful career in and around financial services. Does it surprise you that financial inclusion is still such an issue in the UK?
Yeah, sadly it doesn't. And I think the real reason for that is the economic viability of these propositions, particularly when if you think about my career has come over the last 30, 40 years, during that time, technology wasn't enabling opportunities to be created. I think we've got that opportunity now. So, we do have the opportunity to pivot now by using technology in a way which is much more sophisticated. Legacy systems shouldn't be the constraints for the future. Partnering between incumbents and fintechs should allow this to happen. So it is a sad fact, but I think it's a one that we can do something with now. And the time is now to do something about financial inclusion.
Thank you. And Kelly, turning to the lifeblood of the British and indeed any economy, how's open banking helping small and micro businesses?
Thanks, Chris. Perhaps a little bit of context first, because I was reading some fascinating stats around the creation of new businesses, and you might assume that during a worldwide pandemic, everyone would kind of be hunkering down and avoiding risk at all costs. But the creation of new businesses was greater than it has ever been. And I think that comes back to your point about it being the lifeblood of the economy, because that's where a lot of the innovation, the response, the reaction, adaptability, that's kind of where it sits with SMEs. But I think as well as knowing that, we probably all know that small businesses really struggle to get access to mainstream products, in particular credit, but also tools designed to help manage cash flow, to help manage accounts. And they often get caught between the stall of either sort of consumer products that are repurposed and repackaged for businesses and don't quite meet their needs, or products that are intended for bigger business, which is too complicated, and just as a small business, you don't have the time to kind of grapple with. So it's about access to products. I think that the access piece is important, but it's also about how, when you have those products, how do you use them intelligently and make sure that you're getting the functionality and the value that comes from making the best use of them, which isn't something that a small business has necessarily got tons of time to kind of spend figuring out. So I think that's where open banking has a real role to play. And I mentioned credit earlier. I think that's one of the great examples, the potential to allow people and businesses to better access the credit that they need, inclusive, affordable credit, was central to a decision Mastercard made to acquire Finicity, which is a company that helps lenders kind of streamline their credit decisioning process and kind of better assess affordability, ultimately so that lenders can make decisions quickly, with less pain for those applying for the loans, and hopefully give more yes answers as well. But there's tons of examples in this space. I think Korea are doing some really interesting work in Sweden that enables small businesses to kind of make loan applications at once over multiple different lenders, and then to make intelligent decisions around who they work with. D&B are doing some really interesting stuff in the US to help people sort of finesse their credit profiles. So, it's going to be a multi-year journey. I think Ron made a really good point. It's not necessarily a magic solution that you can turn on overnight, but I do think that the technology, with open banking, but with lots of other things as well, like AI and APIs and all those good things, we are at a tipping point where we can now see that some of this stuff is starting to take off.
And going into a little bit technical on that, Kelly, how do you see a positive post PSD2 future looking? What more could be done to ensure that open banking really does deliver for inclusion, CMA9, OBI, FCA, all of that? How do you see all of those parts being brought to positively bear on this?
Yeah, it's interesting. I think one of the pieces, at least in the UK, where I think open banking is starting to tackle some of the elements around underserved. So, as we said, it's not necessarily that first access to a bank account, but once you're in the system, how can you sort of better operate within the system, but isn't necessarily tackling that fundamental challenge with people who either choose to be unbanked or who aren't unbanked for other more complicated reasons. And I think that is a really interesting opportunity that we could think more creatively about how to tackle. There's something BBVA have been doing with Uber in Mexico, where they've actually been surfacing their banking infrastructure into the Uber app, so that you're not going to the bank to engage with your banking. The bank is coming to you and where you are in the way that you're engaging with your life. So I think that's absolutely fascinating. I think that's really interesting. It may be that there's a different relationship, there's a different way of reaching people. And of course, once you've started with the account, there's the platform to then serve up other tools and services, so it becomes, more meaningful to that person's life. But I think that's where the future is. How do we go beyond the CMA9? We're seeing fantastic collaboration with fintechs. So FIs, the big banks are starting to get there. But I think that this lights up when we go beyond perhaps traditional financial sector players, and I think that has to be what the next iteration is about. How do we have broader reach, both in terms of the end users, but the intermediaries we're using to reach those audiences?
I think the lifestyle point you make there is absolutely critical. Taking that on, Ron, if we fast forward or even go at a moderate pace, 3 years' time, what should we be looking at if we've made some material change in this area? What should a success look like in 3 years' time? What opportunities should we be able to close our hands on in that time frame?
Yeah, look, at 3 years sounds a long time. It's not a long time in relative terms, but it would be great if we're no longer talking about something called fintech. I think it would be a great achievement if we were talking about financial services in this broader sense to help solve problems for consumers, for SMEs, and for society generally. So I personally don't like the expression fintech, and to be quite candid, I was very keen to find a way to expunge that from the lexicon of the Fintech Review, but wise people who were working with me said that was a bad idea because no one would know what I was talking about if I did that. So I think in 3 years' time, it'd be great if we could move away from that. But good to me looks like a fully tech-enabled financial services sector, where there's not really a distinction between fintech and the finance, or the tech and the finance, because the two are essentially hand in hand. It's really interesting. And I was talking to CEOs of the largest banks in the UK through the review and asking them questions and trying to understand certain things. They describe themselves as a fintech. Now, I can see, people on this call thinking, good God, what were they thinking? What were they smoking? But the fact that they think about that and think about their business in that way actually speaks volumes for the way that they think about their business and how they articulate it. It's not about a bank. They think about technology as the enabler. So from my perspective, fintech is the future of financial services and vice versa. And I was keen to do the review because I feel that fintech has not yet fulfilled its transformation potential. We've got a strong ecosystem of innovative startups and significant expertise in technologies like AI, exactly as Kelly says. And the challenge that remains is one of scale. We don't have a problem in the UK with startups. It's the scale-ups where the challenge is. And I think the review has shown us that achieving scale requires collaboration between the public sector and the private sector. It demands that we work closely to solve for market challenges that are beyond any one firm. And I think whether you're talking about open banking, whether you're talking about financial inclusion, or whether you're talking about digital ID, the technology is already here. But for the successful rollout and adoption of something like digital ID, we need a consistent set of rules and standards which firms can follow and which can allow consumers to access products and services with ease and with confidence. And similarly, I think government can't disguise the fact that this is coming, and they can't digitize the payments infrastructure on their own. So we've got to find a way to make these things happen. And then suddenly our fintech IP has a market to grow into and a new infrastructure to operate on. So that's how I believe we can go from startup to scale up in the UK. And this is how I think we can realize the true opportunity of what will be, I hope, a very vibrant financial services sector going forward.
I think amongst all of the gems in your report, certainly all the stuff around scale-ups, absolutely spot on with the success of the sandbox to put that together with a pathway which leads through scale as well will have a tremendously positive impact, I think. And on that 3-year challenge, Kelly, what do you think should be achieved, and what do you think will be achieved?
A very good question. Fascinating, isn't it? I think that the next 3 years is going to mark a tipping point for open banking. We're starting to see so many things in the past 6 months that I think even 18 months, 2 years ago, there was still a little degree of skepticism as to whether this was really going to make a difference or not, if I'm totally honest. And I feel like in the last 6 months, that conversation has died. It's incredibly rare that I talk to anybody who still carries that. I think people see the potential. We can see the big banks, they're getting on board with it. We can see fintechs are kind of driving it forward. So I think that debate has ended. I think people see the potential. I think they get it. I guess there's a big question as to where open banking goes next, and do we move into open finance, and what some of the potential there looks like. Maybe we still need to realise a little bit more of the open banking potential before we start to turn our attention to the next thing. But I think that there's already been enough success and enough movement in the marketplace to indicate that there's more potential in this road, and that we can push the boundaries a little bit further. I think one thing we do need to work on in the next 3 years is around trust, particularly in sharing data. We did some interesting research recently that shows, we kind of asked people, would they be willing to use open banking type services? We didn't put it that way, but open banking type services to see that, to understand their finances, and would they be willing to share their data in order to have a better view of their finances? And what we found is that people were willing, globally about 70% of people were sort of absolutely keen to be able to do that. But in the UK was the lowest of I think it was the 8 markets we looked at in terms of that trust piece, that willingness to share data. So I think if there's a barrier that we have to overcome in the next 3 years, in the open banking sense, to manifest some of these advantages we've been talking about, then I think it's going to be building confidence in the ecosystem. There's going to have to be collaboration to manage some of the risks. There are always fraud risks. How do we manage that? How do we create that sense of safety, security, the right protections being built in, right sort of consumer protections being built in? I think maybe that's the next big, that's what we have to get right if open banking is going to make that next big step again.
You put your key finger on the trust point. It's something I'm constantly going on about, this need for real public engagement across all of the new technologies, and the opportunities in FS, obviously chief amongst those. And it is that sense of get it right, enable people to feel part of it, answer the question, what's in it for me, answer how they can be part of shaping it, do something analogous to the Warnock review on IVF. I mean, what could be more scary than IVF? Science fiction, test tube babies. Why is it a great success? Why is it seen as such a positive part of society now rather than terrifying? Because of a colleague of mine, Baroness Warnock, doing her commission into it, enabling people to feel part of it. We need that public engagement, as you rightly identified, to really develop that public trust and engagement in this. So you rightly talk about, Kelly, collaboration. So what greater collaboration would you like to see across the ecosystem to enable this to become a reality?
I think collaboration is already pretty good. If you went back a few years, there was a big degree of skepticism about certain players working together, but we are seeing more collaboration between big banks and fintechs, and between fintechs themselves, which I think is quite exciting as well, seeing that they can operate in the same. You've got Curve and Plaid working together, and so I think there are lots of quite exciting things out there at the moment already. I think, as I was sort of saying when I was talking about the need to come into intermediaries outside of the FI world, I think that's, for me, that's the missing link in the puzzle. Amongst FI, it's buzzing, the potential's there. I think people are working on a lot of the problems. I'm not sure we've opened the conversation broadly enough, and that people have seen the potential, beyond maybe some payment geeks, at the risk of labeling myself and others in that way. I think there's more out there, and how we tell those stories, real people stories, and help people to see the potential and bring others into this ecosystem, this burgeoning ecosystem. I think that's where the secret lies.
And Ron, you talk a lot rightly about collaboration in your review. What are some of the highlights on that point, that purpose you'd like to draw out?
Yeah, look, I think open collaboration, as Kelly says, is fundamental to overcoming the sticky issues like financial inclusion. Big players, small players, industry groups, governments, they've got to share their collective expertise to accelerate innovation and positive change in the financial service provision. And we all agree that collaboration is at the sort of the heart of success. And in the report, what I was trying to do was to move our fintech ecosystem from, as I said, startup to scale up. But one thing maybe to bring it to life that I haven't touched on is the importance of collaboration across the UK, because our fintech success story is not confined to London, but it's spread across the UK in clusters. And clusters are recognized to grow faster than the mainstream economy. They respond to innovation opportunities much quicker. They employ 25% more people than comparable businesses outside of London. And they pay more with an average of 11% higher salaries. So, if you think about the Pennines, Manchester and Leeds, that would be a cluster. And that cluster's got the highest count of fintech companies outside of London, home to 13% of the UK's high growth fintechs. Oak North, Klarna, Iooka, all have a presence there. Scotland's another one, because it benefits from its strong financial services roots and excellent universities. So rather than sort of vying to compete with one another, which is essentially what's been going on in the past, we need these clusters to come together, to form a much more collaborative web in order to strengthen connectivity. And I think this would subsequently power the sector, fintech sector, and the success for the UK, ensuring productivity gains and the new future-proofed jobs outside of London, which is so vital, particularly now on the back of the pandemic. So, we already have the national network, which is doing an excellent job of bringing these hubs together. But to support this, we've got to, really continue to keep pushing and grow that. So I think that helps to bring it to life, because collaboration isn't just about organizations, it's also about regions.
Yeah, I think the clusters, the 10 clusters piece was very strong in the report, making that point that this speaks to the levelling up agenda, speaks to the Build Back Better agenda, it speaks to COVID recovery. It just makes complete sense. Kelly, I know that with partners you've done a number of interesting pieces of work with financial inclusion. Talk us through some of those.
Yeah, Mastercard set itself the big goal almost just over 5 years ago now, to include 500 million individuals in the digital economy by 2020. And clearly we've implemented hundreds of financial inclusion, digital inclusion programs globally, and we've now set ourselves to double that target again over the next 5 years. But I think what's fascinating and sad in equal measure is that when we talk about that goal, people immediately think of developing countries, and they don't think of the profound need. Some of the stats that Helen and Ron and yourself called out at the beginning, that actually this isn't a problem that's been solved in the UK. So we've been working really on two strands, I suppose. So one is, what can we do ourselves through the products that we have, the membership we have of things like, the Financial Inclusion Commission, the Inclusion Foundation, the work that the Emerging Payments Association do. So how can we just be one of those ecosystem players and doing what we can to bring products, innovation, resources to the marketplace, but also what can we do directly? And we've been working with the Good Things Foundation on a campaign, and literally getting data, devices and training in the hands of people during the pandemic. So a lot of work. It's a massive passion area for Mastercard, and very excited about the potential that open banking has to transform our ability to have an impact and others as well.
Fantastic. We've got just time for a final word or 7 from each of you. Kelly, one ask to government, what would it be?
To be quicker on making decisions around how we take this stuff forwards. We need a path.
Superb. Ron, you were in the fabulous position of being able to make many asks to government, but in a shortened down version of Desert Island asks here, if you just had one, what would be the ask to them right now?
Look, I think, like we've seen with the vaccine, frankly, and life sciences and other things such as that, when we in Britain invest and we have a plan and we can see a potential in terms of what we're doing, we tend to exceed on a global scale. And I think that's the opportunity that we're talking about here in terms of not just fintech, but in terms of financial services. We've got the ability now to guide our own path. Let's make sure that we create the environment and the opportunities to do that. Thank you.
Fantastic. Ron, Kalifa, Kelly, Devine, thank you so much. I think we can all agree it wasn't just a fireside chat, it was a campfire chat. Thank you both very much.
Chris, wonderful. But before Ron and Kelly go, you have engaged all of our community. I have got loads of questions. I'm just going to ask you two. I've just chosen two. Okay, Ron, the first one is for you. And if I could just read it out, Chris, it says, Ron, why didn't you cover insurance specifically in your report? I imagine you've had that one before by the smile on your face.
Yes, no, I've had so many questions saying, why didn't you cover this and why didn't you cover that? Look, I think the reality is that financial services is a broad heading, and the reality is that in it, there's almost another piece of work to be done around insurtech going forward. Insurance is a huge opportunity. The UK again leads in this, and I'm not volunteering to do another review, by the way, just to be clear. But I think that the opportunity does reside for this to be thought about, because insurance is lagging behind in terms of relative activity. So thank you for the question, but I didn't cover it because I thought 108 pages was enough on fintech.
Good point. Okay, the next question is to you both. So Kelly, maybe you would like to lead on this one. And it is, if I just read it out, given the capabilities of new technologies and the ingenuity, that's a good word, of fintech, how does the panel view regulatory and security aspects of growth? Now, we did touch on security and trust, which go hand in hand. Kelly, what would you say to that?
I think we need to remember that we're blessed in the UK by a very, very sophisticated regulatory environment compared to many of the other places in the world. So I think we should start by, we're in a good place with regulators who are really able to deal with this stuff. And I think are focused on creating the right framework for competition and market innovation to drive forward. So of course it's complicated, it's not easy. Staying ahead of the challenges and the risks is not a job I envy our regulators, but I have a high degree of optimism that we have, in the PSR, the FCA, the Bank of England, the PRA, we have a good regulatory infrastructure to set the UK up for success.
Thank you. Ron?
I'm on mute. I'm a fan of regulation because I think regulation is the friend of companies and it's the friend of consumers and small businesses. So I would absolutely hate for anything that I've ever written to be interpreted as let the shackles be kind of, let it be unshackled to sort of drive a less regulated environment. I think we need to have an appropriate regulatory environment that drives outcomes that benefit consumers. So we have got a lot of opportunities here to do that. And as Kelly says, we've got a very, very strong ecosystem that supports growth. And we've got to make sure that it stays appropriate going forward with proportionate regulation going forward.
Okay, thank you. So before Chris and I move on to the next panel, Chris, I just wondered if you had anything you would like to add to either of those questions.
I think I couldn't hope to emulate Ron and Kelly, except to underscore it with the sense of everybody appreciating just what the opportunity is here and what we can all achieve when we do collaborate, when we do come together. We can be really down and think that things are impossible. And of course, I would say this, wouldn't I? I was heavily involved with it, but imagine if we could do for open banking, open finance, financial inclusion, the whole fintech ecosystem, what we did in the summer in London 2012 for the Olympic Games and the Paralympic Games. Remember how we all felt? That was just one moment in time. Imagine doing that, which would have that golden potential for so many people's lives every day of their life. That's something worth working pretty hard for.
Golden potential. Amazing way to wrap up this session. Chris and I need to introduce our next guest. So Ron and Kelly, a huge thank you. It's actually quite sad to wrap up that, because we could have talked for a lot longer. Kelly used the word fascinating, and it really was. So thank you. We're now moving on to our panel around the state of financial inclusion and open banking in the real world, looking at the trends, the challenges, and the case studies. And we have, and I'm delighted to introduce Phil Gossett. So Phil from Nationwide, Sam Seaton from Money Hub, and Laurel Quinn from Sustainability. So Chris, over to you.
Thank you very much indeed, Helen. And as you rightly say, this is all about real world. This is about roadblocks. This is about opportunities. So perhaps, Sam, if I could start with you, there seems to be an extraordinary opportunity for innovation here, not least of product. So why are we seeing from so many traditional players, frankly, dusty stuff being pulled out of the bottom drawer?
Well, I have no idea, as you can imagine, because I think it's appalling. I think, the technology and the legislation has been put in place to tick those boxes, and then we're lagging behind on how we enable that to really benefit people. And just give you a couple of examples. So you talk about, drawdown that people need now to, potentially top up their state pension. And no one knows how much money they'll need when they retire. But I certainly have seen from when I'm involved with these areas that actually what's happening is money is being drawn down, fixed, almost like from day one, before you've even retired, you agree what you're going to have. And of course, a lot of people actually spend 5 or 6 or 10 years not needing actually their retirement income, because they go off and do other things and end up working part-time or doing other jobs. And it really upsets me that that money they could have had invested for another 10 years keeps getting deposited into their cash current account, earning nothing and building up. So, just flexible drawdown could be enabled through open banking. Have a look. Do they need a top up this month? Yes, no. Move the money if they do. So I just think we've got to get a little bit more on it in terms of the products.
And of all the players in the ecosystem, who would you say needs to get most on it?
Well, the ones with the huge distribution. So because they can have the biggest impact on people's lives. So, I want, the big insurers, the big pension providers, the CMNI, I want them to really embrace new products that genuinely combine the legislation, the tech, and what people need together.
Thank you. And building on that, Laurel, where do you see, what's your view on where open finance and smart data is going? OBE has been around for a while. It's been relatively successful, but when you look at the take up, numbers are certainly a heck of a lot more that could be done. So what's your view and direction of travel, and how we can supercharge this whole area?
Yeah, and I think from my perspective, it's all about creating great products and great experiences that really help people. And, that's kind of essentially what it comes down to. So people don't really think about fintech when they're going about their daily lives. They kind of think about solutions that are going to resolve some of the problems or make their lives easier or make them, happier, or, all these different things that people use technology in their daily lives for. So with, the younger generation, Gen Z, millennials, they're very conscious consumers. They want to do good. There's a lot of issues in the world, around climate change, inequalities, and everything like that. So I think if there are ways that people can, that can be addressed, and that we can solve challenges around the things that really matter most to people, then, you know, it's not going to be labeled fintech. It's going to be things that people do every day that solves problems as part of their life. And that's kind of where open finance, you know, open data, you know, everything should be going in that direction of travel, that we're solving big global problems. And, you know, kind of, and people are part of that process alongside the tech and the legislation, and it kind of all works towards those same big, huge goals. Yeah.
And how, building on that, how scared do you think traditional players should be? How scared do you think traditional players are currently, or are we still away from really getting to a breakthrough point where one, or indeed a good number of fintechs really start to make the weather in this space?
Yeah, I think it will be interesting to see the partnerships and eventually potential acquisitions and things that happen over time. But I think there is so many opportunities right now for collaboration. And, you know, I don't think people are, any sort of institutions are necessarily scared at the moment. I think there's just lots of opportunities, and we've spoken a lot about collaboration during this talk, which I think it comes down to we are much more powerful if we do collaborate. You know, incumbents, you know, the kind of large organizations that exist now don't necessarily have the technology or the skills or the ability to do some of the things that the nimble fintechs are doing, which combined, imagine how great that would be. I mean, we've already heard some really great use cases from Samantha, and kind of there are many other people in this that are listening to this call that will be building great products and services as well. So it really comes down to the collaboration is the more powerful thing, and I don't think anyone should be scared of that.
And finally, at this point, what would you say to those startups and burgeoning businesses who are really trying to do fabulous, innovative things here and build brilliant business models around it? What would you say in terms of, you can imagine, you know, no matter how focused you are, it's a hard road, right?
Yeah, absolutely. I mean, when I started sustainably with my daughter, you know, it was just an idea on some post-it notes on the wall. And you just, if you have a vision and you really want to make that reality, you just network, collaborate. You can't do it on your own. That's what it comes down to. You know, it's about getting people to believe in what you're doing, building that team, getting the partnerships, leveraging the data. Like, essentially, we wouldn't be here if we didn't have open banking. So yeah, it's all those great things. You know, we've got opportunities here that in other places hadn't existed, with the ability to access open banking data to build great products, and that can only improve. So yeah, I think, you know, have a great idea, really get people to believe in it, you know, test lots of stuff, speak to loads of people, yeah, and just, you know, make sure you're kind of building stuff that people will use.
Brilliant, thank you. And Phil, you've been heavily immersed in this space. How do you see the future of open banking impacting financial inclusion?
So I think there's kind of two aspects to this for me. One is that if we want to think about financial inclusion, then we need to really focus in on the lived experience of the financially excluded. I think we need to understand what are the real challenges they're living into and facing, and not just assume we understand what's going on with them. Joe Garner, the CEO of Nationwide, he recognized that left to its own devices, open banking would simply allow people with money and choices to have more money and more choices. And he asked the question, well, what about the financially struggling? So he created, and then I architected, Open Banking for Good. But the beauty of Open Banking for Good was that it was grounded. We brought together fintechs with charities and understood, or really deepen our exploration of what is the lived experience of these people. And out of this came 5 quite well-regarded solutions. So I think that the first thing I want to say is that if we want to really consider the financial inclusion and financial exclusion, we really need to bring them in to be part of the creative process. And secondly, I think that open banking needs to move out from being a fintech technology to being a lifestyle technology. And the example I like around this is digital maps. When Ordnance Survey released digital maps, their offering was to allow you to put in your postcode so that you could print a map with you at the center. Now Google came along, not a mapping company, but they understood how important location was in many different aspects of people's daily lives. And people went from using, like myself, I'd use a map twice a year to using it 10 times a day. And at the moment in lockdown, I'm probably still using it 5 or 6 times a day. And in the same way, I think that to realize the potential of open banking, what we need to do is lower the barriers of access to it and basically allow it to be played with, especially with non-financial services companies, and actually open up for lifestyle companies. And then just a reflection, there's the question, why the application's uninspiring? And I think, unfortunately, it's because too often they're created in the financial services world and they're not really created as part of people's daily lives.
I think the map example is superb and so instantly understandable. I really like that. Helen, do we have any questions from our other firesiders?
Well, we don't, but I did. Well, I've got our results of the poll that I was going to share, but Ron, I saw you nodding your head. So whilst we're still reflecting on what Phil said, if you've got any comments there, because you were nodding your head to a lot of what he was saying about open banking lifestyle. So just like your comments on that, please.
Was that me, Helen? Sorry.
Sorry, no, Ron, because I saw Ron nodding his head. Yeah, sorry, I do apologise.
Laurel, happy that you go in as well. Look, I think the point that was made is a very, very important one. I think Nationwide have been, and Joe has been quite a pioneer and a pioneering thinker in this sector as well. And this agenda is only going to move forward when you've got large organisations such as Nationwide and others who start to take the lead. It's too easy for us to get onto Zoom calls and do webinars, as well-intentioned as they are. But our purpose is almost to make sure that we're giving the oxygen to organizations and encourage the fact that this is a movement that is going to have to happen for societal change. So Helen, yes, I was nodding my head because I think it's such a seismic opportunity that we've got, and organizations such as yours, Helen, and others have just got to carry on pushing constantly with all the stakeholders, with politicians, and Chris does that, I know, within the House of Lords at every opportunity. This is a moment in time that we can change society because technology will allow us to do that. So let's grab it and let's make sure that we do something with it. Sorry, that sounded like a passionate plea, but I just think it's such an opportunity that we've got to get it right.
We love passionate OBE. Laurel, I did go off-piste, and as most skiers know, that is where you have all the fun. Is there anything you would like to add before I share our poll?
No, I do want to say something though. If anyone is watching the Euros tonight and wants to do something good to help people who are less fortunate, unsustainably, you can support the Homeless World Cup. So they have helped over 1 million people who are homeless. So it's just an opportunity to give a shout out for something that I think is really important at the moment.
Well played, well played.
Yeah.
Right, Chris, let me just share this poll and then you've got the mic back. Okay, so our poll was, people globally don't have access to basic financial products and services. In your opinion, which of the trends below would reduce this number? And the choice was blockchain and crypto, 8%, biometry even, 10%, and a whopping 76% for open banking and open finance. There you go, very loyal audience there. Right, there you go, Chris, over to you.
Tip top, and well done everybody on answering in the right space there. All important, but you focused on the right one for this afternoon, and indeed broader than that. So just to round this panel out, same question that I finished with Ron and Kelly to you guys. I know it's a tad reductive, but what is the one ask you would make of government. Sam.
So I know this is going to be a little bit of a long-winded answer, so just bear with me. But I was interviewing an economist last week, and I was fascinated to learn that in the 90 years up to 2008, the worldwide economy had gone into 147 trillion of debt. And then in the last 11 years, the world added another 100 trillion to that debt to take it to 245 trillion. So I was musing about, well, post-COVID, how quick can we get to another 100 trillion? Because I think that'll be pretty easy. And I guess my ask is going back to the products and services, and I think even Kelly mentioned open finance, the power that we've got to democratize savings with this is incredible. And I'd really like to see more work, more product, more everything done in that mode. And until we actually make savings popular again and effortless, I think, you know, we're doing a disservice to every single person. So that's my ask.
No, very, very good. There are trillions of reasons to like that answer. Thank you. Laurel.
Yeah, I mean, I, like Samantha, have connections to good causes, so charities, we support that sector. During COVID, in the UK alone, lost £11 billion worth of income. So obviously my whole focus is like, how can we help that whole sector recover? And given that there's 35 billion cashless transactions a year in the UK, you know, little rounding up of micro donations here and there, imagine the impact that could make. So, you know, it's leveraging the technology that we do have to solve the problems that we do have. In, again, coming back to this frictionless, seamless ways. So I'd like to see the removal of the need to do the 90-day re-authentication. Like that, for me, would simplify a lot of the issues where people are signing up to things, don't realize 90 days has come. These things required, you know, it's required to be operating in the background for products and services like the things that we're trying to do. So that kind of is just one of my bugbears, but yeah.
No, much more than the bugbear. It's an incredibly significant point when we tie it together with what we said around these things needing to be seamless, frictionless, lifestyle focused, all that. It's extraordinary. It's more than friction. It's just one great big unnecessary rock, which is just.
I also believe it just opens up the doors to customers potentially experiencing fraud. So, you know, you kind of don't want to have people coming in with, you know, notification pretending they're you, come and click this, you know. It's just kind of another avenue which just removes, it adds friction, you know, to the process. So yeah.
Spot on. Phil.
Okay, probably slightly left field. My background's innovation, and I've seen an awful lot of money spent in innovation over my working life that has been unfocused and has just been wasted. If I could do one ask, and actually what we did with Open Banking for Good, we put 3 very specific challenges out. These are the real challenges people have we want to solve. I wish the government would use this approach more. I think it's a great way of driving innovation, particularly around making an impact. I think that if the focus is on building a domain, if it's about investing into a domain to make it bigger and stronger, I still think the best way of doing that is to be very, very clear about what the ask is and what are the solutions you want solving. So slightly left field, but that would be mine, I'm afraid.
No, a really key point, and the sense of what we absolutely don't want in this field or any field is technology desperately poking around the place in search of solution. It has to be that solution, individual centric approach. Completely right. Helen, thoughts?
Well, I do have a question here from Sibylla Din. So this one is intriguing because I actually don't know where to field it to, Chris, so maybe you can help me. So well done, Sibylla, you're getting me thinking. Investors still fight shy of backing banks focused on the underbanked in developing markets. How can we change the mindset of investors?
Superb. And I think just because I think like this, Sam, thoughts?
Well, I have some sympathy because I feel the investment world is still a man's world, very much. So I sympathise, and I'm afraid there is no easy answer, because investors want an incredible return on their money. And at the heart, so I guess my pushback or my ask would be that actually, if we can raise the profile of resilience and sustainability and the impact you have on this planet, if we could raise that profile, that would mitigate this pure return-based focus. And then, of course, that would then mean in a portfolio, you should be investing, say, you might invest in 12 companies, of which one of them should be the unbanked in Africa, for example. So that would be my answer. But I'm going to say I have not seen it yet. A lot of talk, no action.
No, dare I say pure and puerile singular focus. Laurel, Phil, would you like to add?
Love what Samantha said. Brilliant. I've got nothing to add on that. I think that's great.
Phil?
No, I just think that I think there's many reasons why people are unbanked and underbanked. And I just think that, again, it's an area that, rather than us assuming that the right thing to do is to be banked, I think that we need to understand the reasons for those people, so that then we can start tackling those problems rather than making the world look like we believe how it should be.
Completely. I think that's a really good point to round out this session, on the sense of going back to what should be, what must be the purpose of financial services. It must be that sense of enablement, empowerment, unleashing individual potential. So that's absolutely spot on. Helen?
Wow. I hate to cut off this conversation, but sadly our time has come to an end. So thank you all. And next up, we have a presentation from Ariadne. So she works for CGAP, which is part of the World Bank. And we don't often have presentations at OBE. So we have broken one of our rules here, but there's some fascinating stats to share on how to design open banking for financial inclusion. So over to you. Let's have a look at this presentation. I am dying to see it.
Thank you very much, Helen. I'm just going to share my screen. Can you see it? I'm going to play it from the start.
Yes, we can.
Fantastic. Well, thank you very much for inviting me. I did want to give a little sort of brief intro about CGAP. We are a think tank housed in the World Bank, and our focus is financial inclusion in emerging markets. And so about 2 years ago, we had a hypothesis that open banking was not just for developed markets, and it wasn't just for rich or middle income people, but that there could be a link between open banking and helping low income individuals in emerging markets. And so I'm going to show you a bit the result of our research from the last 2 years. And we produced a paper that you can find on the CGAP website that summarize, well, we'll go much more in depth. So this is really just a teaser, and I hope you get interested enough to read the paper. And so when we talk about open banking, now, I know that in the UK, it's mostly focused on banks, and in the EU, if you look at PSD2, it's really about payments. But we see it, because we're looking at people who most likely are not banked, we really see it as a journey from open banking to what we call open data. So open banking, obviously, what we classically think of as open banking. Open finances is when you expand beyond banking to things like pensions, insurance, investments, which some of the emerging markets have already actually done in their open banking regimes. And then what we call open data is when you can actually access non-financial data to support financial services. And so that things like information about telecom subscriptions and airtime usage, social media, e-commerce, weather, even GPS, if we're looking at people who are in agriculture. And so we see this as a linear progression. And I just wanted to make sure that you saw that. But in our analysis, how do we think that open banking can help low-income individuals in emerging markets? Well, we actually think that if it's properly designed, it can actually empower these people, because it can create products that have improved value for what we call the underbanked. So they're actually banked, but they don't use the bank account, or they don't have appropriate products. And at the same time, because when you have open banking data sharing, you allow new entities to come in, like TPPs, such as account information service providers and PISPs. These new entries are going to create competition, which will lower prices, make it generally more affordable. But basically, it's also going to change the perspectives of all the providers in the market. So now, unbanked and underbanked are actually can possibly be more profitable enough to be targeted. So, and that's because of all the economies that you're going to get from the data sharing and basically the minimization of a lot of the customer journey, a lot of the customer acquisition costs, and things to do like KYC, you can all minimize that with open banking. And so we hope that that's going to increase the customer pie, and it's actually going to incentivize the traditional stakeholders, such as the incumbent banks, to start looking at this segment of the population. So what we did at CGAP is we took a customer-centric view, and I heard that actually in the panels today, and we said, what are the pain points of low-income people in emerging markets? And here we've highlighted 5 of them. There are actually a couple more in our paper. And we took them and we mapped them to open banking use cases that we've seen in the UK, in the EU, and some developing markets. And we've saw that there's actually at least 1 to 2 solutions for each of the problems. For example, low-income people have issues with either volatile or irregular income, and that's where saving trackers and automatic saving sweepers can come in. Also, they can have access to inappropriate or no credit, and that's where alternative data, credit scoring through open banking is really useful. They often feel that they have a lack of control over their budget and their funds, and that's where products like personal finance management are key. Also, we talk about something called the poverty premium, in that households that are low income often pay higher tariffs for things like electricity, gas, and broadband than the middle class. And utility switching tools as part of a PFM or even separate can make sure that they can actually get better information and move to a better suited and lower cost product. And even, which is very revolutionary, in some countries like Brazil, they've used open banking not just for transactional information from customers, but also to share KYC data, which makes opening accounts much quicker, using financial products much quicker, and can actually help people who don't have a normal identification. So we can see it even to help this lack of ID to access financial services. And you're probably saying, but in emerging markets, they don't have smartphones. And we know that a lot. That's not true, actually. They are smartphones, but I'd say, for example, in sub-Saharan Africa, only 45% people have smartphones. So the rest, 55%, are going to have a feature phone. And through the work we've been doing, we've realized that a lot of the open banking use cases and products don't use the data only on the front end. They use it on the back end, which means some of the products don't need to be visualized for them to work. And in a feature phone, you don't have visualization, but you can respond through using USSD or SMS menu. And so there's use cases like automatic saving sweeping, smart loan repayment, and this sort of collaborative KYC that you can definitely do without having much of a change in the user experience. There are some use cases that require visualization but are still usable by using SMS or USD, but they'll have less functionality. But the idea is about 70 to 80% of the products are still usable on feature phones, which is a really good point for the people we're looking at. So what we did is we did a survey of 12 countries, and we who've implemented open banking, including obviously the UK and Europe, but we've also gone on board and looked at emerging markets. We looked at Mexico, we looked at Brazil, we've looked at Indonesia, Singapore, Australia, and we distilled that there were 12 design components that almost every single open banking regulation has that you need to think about. And then, so these are the 12, and so 4 of them relate to scope, and 8 relate to implementation. Now, this paper, just to explain, was targeted at regulators, and in particular, emerging market regulators who are interested in introducing open banking, but they want sort of a how-to guide and sort of what are the main sort of issues to focus. So our report goes through that. But what we did is then we went and we looked at the use cases that I showed you earlier, the customer-centric use cases, the ones that solve the pain points of the low-income people. And we realized that 5 of these are actually crucial, and you have to take crucial decisions in order to facilitate those use cases, right? And so they really are relating to the scope and one part in the implementation. And the idea is, if you have the more types of services that you envelop into your regime, right? So what I mean by that is not just banking, going beyond banking to open finance. And if you can go to open data, obviously the much more diverse and much more competition you create, a lot more services are going to be possible for the low income. The more entities you allow to be participants, not just banks or not just fintech, not just financial institutions, but opening it up, again, the same type dynamic. And then if you think about the data, not just customer transaction data, if you're willing to open it up to things like KYC data or customer account data, or even, as I said, thinking about e-commerce data, thinking about social media data, the more you're going to be able to bolster the thin digital trails that poor people have in emerging markets. I didn't have time to really go into it, but payment initiation, although it's not the data sharing, it's part of a lot of the open banking regimes, is really important to create a seamless relationship between not just the analytics and the recommendations, but that the person can actually act on it. And it's part of the empowerment process. So we think that payment initiation, if the infrastructure is there, you need to have real-time payments or sort of instant payments to do that, then that really needs to happen as well. And then one thing that is maybe a bit controversial is, how do you pay for this? There are many different models. Our paper explains a little bit the different options that you can do. But one thing we think are adamant is that you should not pass down the price or the cost to the final consumer, because that will be a huge barrier for low income people. That might just stop the use cases in their tracks. So there needs to be innovative and creative ways of making sure that the open banking system is sustainable, but also doesn't have any repercussions on the low income individual. So the last thing to show you is a little bit how this works out. Okay, so we call, by the way, this idea that there are 5 design elements and that you need to sort of focus on, we call that financial inclusion by design. So you're designing the open banking regime with the social goal as one of the social goals as financial inclusion. Obviously, many of the main rationale is promoting innovation and competition, but if financial inclusion is also important, then this is how it would work out for one use case. So this is the use case that is really close to my heart, which is to do about savings. I think savings is really important, especially for low income individuals. I think credit can sometimes be much more problematic. So this is a great use case. And here on, you'll see is basically the 5 different design elements and sort of the situation or the choices that need to exist for this type of use case to happen. So for example, in the participants, you really need a huge variety of participants. It cannot be just banks. It has to include not only payment service providers, but for example, e-money, because in Africa, most of the people are using e-money off their mobile phone. They are not banked. So if you take that out of the regime, basically, it's not going to bring those people in and it's not going to help them. Now, obviously, if you want to do a savings tracker, you need to really see what are the ingoings and outgoings of a person's transaction account, right? So that is the key. You have to keep that in scope. For savings trackers, banking and payments are important. You don't necessarily need access about insurance investment, but there are other use cases where you'd want that. And something that's key is payment. You need payment initiation to make it really seamless, because the idea of the sweeper is that there's an automatic pulling of the savings from the person's account when they're able to save, right? Having looked at their income over time and their outgoings. And you need to be able not only to do that once, you need to be able to do that on a recurring basis. And so that requires a specific legal framework. And that could, in certain countries, this might be something you'd want to put into the open banking framework. And the last thing is about the cost considerations. I said there were different models, and in some models you have a tiered model where you basically certain data calls are free and then other ones are premium. For example, for this to work, you would need to have real-time and almost continuous data calls. So if they have a price, then this is going to cause this use case to be prohibitive. So if you are, to conclude, if you wanted to do this type of savings use case and push it for financial inclusion, you need to take specific decisions. And we've laid out all of these in our paper, so I hope that has been of interest. And yes, thank you.
Wow, thank you. It's been more of interest, and we will be sharing that with our community, both in our newsletter, and we'll put it up on Giovanni's blog. Chris, we have had a lovely comment actually that I just want to share because it sort of warms the cockles of your hearts. It says, this isn't a question, it's more of a thank you from somebody who's and I'm going to paraphrase some of this, from someone who's not had the eases of childhood. This is probably one of the most refreshing conversations that they've heard on financial inclusion.
Oh, thank you.
Yeah.
That's really sweet.
So, Chris, how do we follow that? Well, sorry, you first.
No, I was gonna say to you, I think we have an excellent final panel to absolutely follow on in that theme. Over to you.
We certainly do, and with Freddy from Kudos. So, Freddy, you can talk more around your report than I mentioned at the top of our campfire. Phil James from Eversheds Sutherland, and Muna Yassin from Free Money Advice, and of course, Karen Elliott from Newcastle Business School. You have got a hell of a final panel, Chris. Over to you.
Thank you very much. And as you identify now, we're getting into real examples. What is the technology doing? How are we seizing this opportunity? How are we proving that solutions exist and how are we bringing them to bear? AI, DLT, all possible opportunities. We'll start with you, Freddy. Great to see you again. Credit, a massive problem for people if they want to participate in FS and indeed in full citizenship. Access, hugely problematic. How are we going about solving this? What do people really want?
Thank you, Chris. Yep, great to be here talking about something that's so important and so core to what we're all about as a business. Properly functioning access to credit is the key to social mobility. And therefore creditworthiness should be a measure of your health, not your wealth. I think Phil mentioned a little bit earlier, this need to design for the right audiences. When I started my career in Fintech, I heard this concept of Henry quite a lot as sort of being a target customer, which I find out later stands for high earning, not rich yet. And we do have too much of a focus on apps that help you make your money go further and grow more of it and invest more of it. But we lack focus on arguably the area that we can make the most impact, which is helping people that are in need and perhaps less included. Ron mentioned at the start the opportunity to lower the cost of borrowing through the use of new technology and data. And today, unfortunately, it costs more to serve those who are most in need. So there's a real opportunity and a need to drive that cost down so that credit is attainable to everyone at a fair price. And that's really what we've been trying to deliver and trying to prove. And we're very fortunate that in the UK, we've taken the lead with open banking globally and built a set of APIs and a framework and an infrastructure that is enabling new products to be brought to market. Open banking gets talked a lot about as this technology, as APIs, and aren't APIs cool? And yeah, I'm sure for us to all geek out on APIs is fun, but it's really just an enabler for building new products. And for us, credit decisioning is a really fantastic application of that data. We've seen some really great examples and stories come to market. One that I wanted to share in this forum was with actually support from government through the Affordable Credit Challenge. We were able to work with the police credit union who serve folks in, as the name suggests, in the police forces. They also serve military, prison service, and other kind of key public functions. Often those folks are the most financially excluded. So we heard earlier, we often think about exclusion being, other countries, not our own, but on our doorstep, we have this problem. People, it's a simple problem as military, people serving in the military, living on barracks, not having a registered address, and therefore having no credit file to be matched to. We've allowed them to increase their lending by 15%, so reaching more people by delivering a product that essentially uses open banking to monitor their behavior and drive a link directly between the interest rate that they pay and essentially the financial health and affordability of the customer. And again, this happens on the kind of more marginal applications where that threshold and that understanding of vulnerability is most important, and we can really make a difference with the APIs that we've got through open banking. And I guess just to kind of further kind of multiply the impact, we've had a really difficult 12 months. We've talked about the economic impacts of COVID, and unfortunately that's meant that a lot of the market has decreased lending or even ceased providing, and that's happened more at the lower end of the sort of the more subprime risk bracket, which is causing more exclusion. And I'm really pleased to say we've seen in that time frame open banking usage has grown for us. It's been more than 5x, and it's driving a real difference to enhance that decision making and allow people to continue to borrow and continue to borrow at fair rates by using their data to demonstrate financial health. I think we're just at the beginning of this though. So Ron's fantastic review has sort of paved the way for open finance and smart data as being the next steps. And we have this opportunity now to grow further into this role and really continue leading that adoption of new data and unlocking new opportunities to serve customers.
As you rightly say, Freddy, it is but the beginning, but equally you and your team should really take stock and have pride in what you've achieved so far. I remember when we spoke, when you were right at the beginning of your journey, and it's tremendous what you've achieved so far. And it's great to see you and others in this space really delivering change for individuals. And to that point, Muna, how do we really capitalize on trust and the learnings and the digital steps forward we've taken over the past 12, 15 months?
Thank you, Chris. Really a couple of very important points. And I think what we've seen, and it was interesting to hear Ron and the other speakers speak around the increase in digital use over the pandemic. We've started to see that amongst our client groups who are very low income, have specific vulnerable characteristics. So at Fair Money Advice, we've been delivering debt advice for low income communities for about 20 years now. And as you can imagine, we've seen the whole changes and the evolution of the financial services sector. So when we first started delivering advice, we were dealing with the collections department, and the acquisition department was contacting the same client offering a new product. And that has really, really changed in terms of how the financial services sector take the responsibility around low income households and communities, but also that how technology plays a part in making smart decisions and ensuring that people are not falling into further difficulties. So I think one of the points that was really interesting, and several people have already raised it, is around the lifestyle point. And so one of the things that we've seen amongst our client groups is where they had difficulties getting to grips with digital before, and digital exclusion was massive prior to the pandemic, and lots of technology has been distributed. They're less kind of reticent to get involved when it's a lifestyle issue. So being able to order a taxi, order some food, connect with family. And it's great to see a lot more people are making that leap from the lifestyle kind of technology, but also to financial services. One of the areas that we've seen is a massive jump from our client groups who traditionally would never have used kind of open online banking or telephone banking, going straight to the apps and their smartphones. So how do we capitalize on that? And I think trust is a massive issue. And for us, I think the issue around collaboration, it's great to see collaborators within the fintech world and within the financial services world. But I think to Ron's point, it's really, really crucial if we want to start focusing on low income households and communities, is that collaboration with the civil society and VCSE sectors, and using them as intermediary organizations and trusted organizations to start that conversation around what are the needs for that group, but also thinking around the additional financial services. So when we think about financial services, we're continually thinking about credit products and savings products, but there's also advice. So the evolution of advice and how the expectations around debt advice, for example, we know that people who are accessing debt advice are only 17% of those that need it. How do we make sure that at front and center, using technology, that people recognize that they need advice as opposed to a credit product? And how do we make sure that people are able to access those in a way that's meaningful and relevant? And to the point around products, I think if we can make products that people feel that has been catered for them and that speaks to them, and coming back to that lived experience, if we can make sure that people feel that connection to the product, I think you will start to see a much bigger engagement.
I think that's spot on, and it doesn't surprise me. It's quite right that trust has been rightly a pervasive thread through all of our discussions this afternoon. And I think you make the additional point extremely well, that the right app on smartphone, whatever it is, in digitally unenabled hands, the payment or the service isn't being made. That same app in digitally enabled hands, but without the infrastructure and the connectivity, the payment still ain't being made. So it's how all these elements draw together. And again, the learnings that we've had in terms of how life has been different over the pandemic brings me, Phil, there's been a lot of talk around profitability over purpose. We certainly do have an opportunity from what COVID has taught us and enabled us to understand about how indeed we can do things different. What does that need to look like?
Well, I think, well, firstly, it's a great pleasure to be part of this panel on Campfire, because obviously it's a fantastic things that people said, especially for good. And I particularly enjoyed Ariadne's presentation. It was excellent and covered the key themes. I think obviously, with organizations, especially corporates, many of which are our clients, of course, it's good, of course, to talk about doing good, but one has to have a business case, like for everything else. And trust, brand, and reputation are key to that. But ESG is, of course, central to this. So this isn't environmental, social, and governance regulation effectively now. It's not just a movement. It's the hard facts are that corporations will be needing to make financial disclosures around ESG and what they're doing in this space. So it's not just simply a question of doing the right thing. It's actually good business. And I think if you can make yourself more attractive to customers, investors, your business partners, and your employees, why wouldn't you do that? So you can have, I know it sounds, people think, oh, you can't have this, but actually you can have this. You can have the win-win. And without having too many cliches, it's technology serving the people, not people serving technology. So in relation to things like artificial intelligence and bias, in the privacy world, you do things called privacy impact assessments, but actually, if you're drawing that wider to artificial intelligence, bias actually in a way stands for bias, impact, and service. And people should be thinking about the bias, not only just the privacy implications when they're building and developing these products and the user interfaces in open banking. And I think there are common principles that apply in the tangible world in the context of things like real estate developments, where you have community infrastructure levies, and also you have affordable housing that has to be built into development projects. I think also in technology projects, these same principles can be applied, even though we're talking about technology developments. What's the difference? Actually, what we've seen is the actual intangible things we're building are as important as the tangible. And there's a real sort of multifaceted legal framework here, because the competition and antitrust regulation also applies in the context of making sure things are fair for consumers and they aren't prejudiced in terms of profile building and automated decision making. And this comes from things like obviously GDPR and the data protection world. And also going back to the people element, it's making sure that we're protecting people who have protected characteristics. And again, that goes back to people being right at the center of all this.
you beautifully and rightly take us into the ethics space. So Karen, you're setting up something which I'm fascinated and to learn more about, the Digital Ethics Hub. Tell us more about that, and what are the issues ethically when we look at this whole area of financial exclusion?
Well, I run co-lead 2 projects at Newcastle in conjunction with computer scientists, because it sits, as we said here, it starts with people, but it sits at that juncture between social and technical interaction. And as Phil was saying, we're sort of looking at behind that, what are the decisions that are biasing, say, credit risk scoring? Why is it that people can't be financially included? And that, as the other Phil Gossett was saying, this has led me to reach out and work with people like the Astor Foundation to understand from their perspective, give them a voice in how to build and look at the pain points that Ariadne was explaining there about how do we build technology that works for that cohort. And this has led me, I've been on sabbatical since February and built various connections, including sitting on the Prime Minister's Challenge Dementia board. And you might say, why dementia? But that's come from a personal use case of my mother's got early stage vascular dementia and trying to access finance when she's also partially deaf, but also not computer literate. And I thought that's just one case. So then when we're speaking to people who are struggling to access financial, because the FCA brought out the nice table of 4 drivers of vulnerability in finance as health, lifestyle, capabilities, and resilience. And when you start to deep dive into each of those, you unpack various areas that cut across the ethics. What are we doing with people's data? Is the machine learning and the AI, which are 2 separate things, actually starting from a point of bias? And unfortunately, as we've seen in some of the presentations and discussed, there's still a lot of bias there. So one of our projects, FinTrust, is looking to develop an ethical toolkit which removes as much bias as possible. But we have to think around Kahneman's warning that our brains are both biased and noisy at the same time. So we have to have that in the back of our minds when we're using technology for the good of people. So the Digital Ethics Hub has come out of that. Initially, I was thinking of focusing on fintech, but I've realized that it cuts across the horizontals we've talked here, across business, society, and education. We have a role to play. I've sat on a few round tables saying, what is education doing? And I know that as an academic myself, who's been in industry before I was in academia, there's an upskilling on the side of the academics to be up to date and to work collaboratively with industry to make sure that what we produce works across all, and also instills the next generation to work with the likes of Freddy and to learn how to use the technology to serve people. So the Digital Ethics Hub is born out of that, to set up around collaboration. For instance, IBM's one of our strategic partners who sees this social technical space as a way to emerge, a way to broaden what technology can do to enable and help people access open banking, open finance. I've been working closely with GOFGO, which is a Global Open Finance Centre of Excellence up in Edinburgh University, set up with Gavin Littlejohn, who many of the audience will know, and Kevin Talford, and Helen's been involved in that. So it's working collaboratively, learning lessons from them, but also the broader issue of the ethics. What are the questions that we're asking? So to come back to ESG that Phil was talking about, this underpins the concept of corporate digital responsibility. Now that's separate from corporate social responsibility, and then it's looking at what are organizations doing within and by that organization with their digital and data activities, and to see where the responsibility is. So there's a group of us from MIT in America through to people in Germany, Switzerland, Hong Kong, looking at how can we look at digital responsibility beyond what the FC warn of a ticky box mindset culture coming in. We've done CSR, tick, tick, tick. Let's do CDR, tick, tick, tick. We don't want that. We want it more, as this discussion has said, about evolving around what we're doing with technology, where the impacts are, and how we can best push forward to address the people who haven't had a voice to say, how can the technology help them? We've made steps forward, but I think everybody on the panel acknowledges that we're just at that cusp of pushing forward. So the Digital Ethics Hub we'll be looking at across that. We also have, in this nice building behind me, we have the National Innovation Centre for Aging and the National Innovation Centre for Data, which collaboratively can help work across different streams of organisations to look at where the pain points and how we can help use the technology to serve people better. And also looking at the legal side of what are the implications of AI, because I am currently underdoing a machine learning course myself and realize that the decisions around some of the regression models are you add in just enough bias to make sure you're getting towards accuracy, which in and of itself is down to human subjectivity to decide what the accuracy of the model is that we then train machine learning to do. So there's lots of questions to ask around the ethics of that to make sure it doesn't become ethical washing, as Floridi wants, and to move forward. And we can only do that through collaboration. So I would invite anybody on the panel or anybody watching who wants to be involved in looking at digital ethics across business, society, and education to please get in touch and help us. And of course, that goes to governmental levels as well.
Thank you very much indeed. Extraordinarily innovative and interesting. And as I've got the microphone, you can count me in. Helen, it feels, certainly with the temperature in my room, that some of our campfirers have put a few extra logs on the fire, which is all to the good. Have they put any questions in the Slido as well?
They have, but I've got one that I would like to include Ron on, and this is something very close to my heart. So whilst I've got the mic, Freddy mentioned credit unions, Ron, and I know that credit unions is something that was mentioned in your report, and how linking that with fintechs, and there was this untapped, if I remember your report correctly, there was the credit union said there was they needed the fintechs to do more. There was an untapped resource, okay? And then Freddy particularly mentioned the armed forces. I'm from a military family. One of our amazing charities, if anybody wants to use their phone and scanning that QR code, is to SAFA, which helps retired sailor servicemen and the armed forces. But going back on, because I went off on a bit on a tangent there, Ron, I couldn't resist. So going back, Ron, linking Freddy's comment and credit unions to your report, I would love to hear more about that particular point. And then I would like to come back to you and ask you something else as well.
Sure. Look, I think, and you know, saving Freddy's blushes, but Kudos is essentially a credit referencing agency, if I use it in that context, which is helping lenders make better and faster credit solutions. So the advantage of organizations such as that, and lockboxes and others, which allows saving history to build your credit score and therefore allowing lending at competitive price in the future. Helen, we've got to find ways to give organizations such as this the opportunity, because they speed up the process and they provide better outcomes. They provide better outcomes in terms of data and, frankly, information. So I don't know enough about the specific one that you've referred to, but I do think, you know, we are on a crest of a wave here to try and change the way credit is available to individuals and, frankly, to SMEs. I personally fear that on the back of the COVID experiences, we have got a huge number of SMEs who have borrowed in one form or other. And frankly, that's not sustainable, because they've had to use that to kind of carry on in terms of working capital. Now the question is, how do they build the business and go from here? They're going to have to go and borrow more money. People are not going to lend them money in the same way as they have had in the past. So innovation and technology, and that's a form of inclusion or exclusion, you know, depending on how you think about it. But that is a real issue that we've got to have to tackle. And it's not an issue for 2 years away, 3 years away. This is going to happen in the next 12 months. So sorry, I've gone off a tangent, Helen, but I think the point is that we've got to find mechanisms through technology where the data is shared and the data is available to allow better decisions. Because no one wants to lend money. It's not good for the banks. It's not good for the financial institutions to lend the money and know they don't want to get it back. So that's just never going to happen. So we're going to have to open up the vent in terms of this to try and find new ways to get access to finance.
Absolutely fascinating. I wish we could chat for a lot longer, Chris, but I need to, we need to start wrapping things up. So first of all, let me just thank the last panel. Absolutely amazing. And Chris, you use the analogy of the logs on the fire. And what we have done, if I can just work that analogy a little bit further, is, well, to start with, my WhatsApp has lit up, and we have certainly ignited a lot of debate and conversation. There really is a huge amount of praise for all the speakers. And I do actually have, I wonder if I can quickly sneak this question in, sorry. Okay, I do have a question here. Experian, that was just snuck in right at the end, wasn't it? Okay, Experian is already using open banking to support credit unions to help pre-qualification and eligibility for the credit unions loans. Oh, it's more of a shout out. Well done, Experian. You caught me on the hop there. A bit of a plug for Experian. I think that, Ron, was because you said you bigged up, to use a colloquialism, Freddy. I should have read that message before I started reading it out, but well done, the guys at Experian. Okay, so Chris, a big thank you to all of our last panel. What I would like to do is pass the mic back over to you and to Ron before I say goodbye to everybody, just to sum everything up and to try and wrap things up. Ron, it has been absolutely fascinating. Where to start in summarising, please? Where do you start?
Very difficult to summarise such a rich discussion, I think. But we started with data. We talked about facts. We've moved to a dialogue about trust, about brand, about reputation. And I think we talked also that the role of many is not going to be the answer to move this along. This is not just about a few of us trying to move the needle, but it is going to be the role of a few, such as the people on this panel and others, to just shine a torch very, very brightly on a subject which is, I think, which is going to be something that will change humanity. And I think that's the way that I think about this. A campfire, I was thinking, I haven't been to a campfire for years, but a campfire, I think, is symbolic of a camp. It sort of represents the togetherness between the campers and nature. And this has sort of created a feeling of togetherness and collaboration. And we talked about collaboration. And I think it's really promoted an atmosphere of being together in a setting to tackle one of the biggest issues, as I say, for humanity. So, Helen, I'm delighted to have been here, but I'm going to pass over to Chris because he has been such a strong advocate for this huge issue and is making such a difference. And I'm thrilled to have the opportunity to be on the same platform as all of you. Thank you.
Thank you.
As ever, incredibly kind and sagacious words, Ron. Tremendous to be alongside you, and indeed all of our panelists and all of our campfirers, as you rightly identified, Ron, and like yourself, it's been a long time since I've been around a physical campfire, but it definitely makes me want to go camping again, to be in that circle, and the fact that you do sit in a circle around the fire, and from that you don't just get heat, you also get a tremendous amount of light in the midst of nature. And what we've had today is so much light illuminating the issue, lots of detail, lots of great facts, but the threads and the underpins have been around passion, potential, and purpose. Digital is the future, and that future is so much now. We haven't talked about it today, it's not for this call, but we have to do everything to protect cash and all those that rely on cash. It matters, it still matters, and it matters materially to millions, but the future is digital, and it's for all of us to ensure that that future is inclusive, accessible, and that we enable and unleash a future financial services, which is what financial services should always have been about, and all too often has fallen somewhat short, about potential for individuals, for small, medium, and mega businesses, enabling better communities, cities, countries, and a more connected, more collaborating world. That's what today's felt like. It's been an absolute pleasure to be with you all. All connect with me. We can make great stuff happen. Thank you very much indeed, Helen.
Chris, Ron, I am not even going to try and follow that. Collaboration is a big part of what we do, so thank you. And a big thank you to all of our panelists, and that is a heartfelt thank you from me and from all the amazing comments I have received on WhatsApp. And I can see that my LinkedIn and email has been alive as well. All that remains is for me is to say a big thank you to our sponsors who allow us to make this happen. And on a very personal level, I have truly enjoyed the depth of this conversation. So thank you. All that remains is to say a big thank you for everybody for joining us, and to wish you and your families the very, very best of health. Thank you, and take good care. Bye-bye for now.